It's Sunday, the 10th of February 2019. Been a pretty good couple of weeks for the gold price now, consolidating above 1300 US dollars. Firm uptrend in place here, steepening if anything, and seeing a nice little consolidation here above the 1300 level. That's what you want to see. You want to see those $50 up moves, in the space for a week, and then some nice consolidation, but not retracing a significant amount of the move. So we haven't, even after it got above 1320, we're back up to 1315 here a couple of weeks later, and that's a good sign. A nice shallow pullback there. So I think this is a firm uptrend here, and I think you just sort of got to go with the flow a little bit. Always be aware of these sharp turning points in the gold price, but at the moment I see sort of the I guess the fundamentals behind this move are looking stronger if anything. The main thing being that the Federal Reserve is done with interest rate rises, in my view. I've been saying that in these videos for a few months. They did make that move in December, and that caused massive moves down in the US stock market. And of course they've after that a really strong down move. Now the Federal Reserve's completely done an about face and has now sort of basically cut off any suggestion of interest rate rises in the next 6 months. The markets love that. But I'm not sure if it's really enough to turn the story around. And I've seen a few sort of more bullish things that make me feel, generally I don't want to be hyper bullish on the gold price, but some of the fundamental stuff I'm seeing, the way this has turned around, and now that they're basically beholden to the stock market, as I've always said in these videos, and it's been pretty obvious for the last 10 years that the Federal Reserve will do, if the stock market starts really tanking, they're going to stop raising interest rates. It's not in their mandate, but they really do want to look after the US stock market, and that's particularly with Trump in place. But then we're seeing things like this, where the Fed debating whether they should use quantitative easing in non-crisis situations, like in 2008 and the aftermath of that. So we're sort of seeing a few things in US politics, with some of the Democratic candidates as well talking about this sort of modern monetary theory and things like this, and that's sort of becoming more mainstream. So there's been a bit of a shift in the last couple of months, and I think that's positive for the gold price. It's undoubtedly positive, all these things. So we're now at the end of the interest rate hiking cycle, and the Federal Reserve also probably backing off some of their bond selling. They're reducing their balance sheet. So I'm not sure where the market goes from here, and I think if that uncertainty is probably going to be positive for gold. Obviously, the S&P 500 has bounced very nicely from the lows. But the question now is, I think, what's going to drive it higher, and whether this move here has caused enough damage to be the end of the bull market. I still think it has. This move here for the last month looks a little bit long in the tooth, and we're up against a bit of a resistance level here around that 200-day moving average, which had been important in the past. So I don't think this is going to go back up to new highs. I think the damage that's being done by rising interest rates in the US economy has turned the market now, and we're probably going to see turning back down in the next month or so. That's my view, and the Trump and the Federal Reserve and everyone's trying to push it higher, but I just think too much damage has been done. Locally, the Australian dollar has really fallen off a cliff this week, and looking extremely weak there, below 71 US cents. That's despite some good news for the iron ore price, with that sort of I think up above 90 US dollars and sort of a 3 or 4 year high now. But that's not enough to pull the Australian dollar higher. And I think the Chinese economy is generally sort of okay for, in this sort of short-term period, so that you'd expect the Australian dollar to be doing better than 71 US cents. But that's mainly due to this another point this week was how the Reserve Bank sort of cut their neutral bias, or cut to neutral, I should say. They had sort of a raising bias for interest rates, a tightening bias. But that for the last 3 to 6 months, it's been clear that the market, the Australian economy has been turning down on a number of indicators. So the RBA really showing how they're completely behind the 8 ball here, and I can't really believe that it would. It was pretty obvious that the Australian economy was turning down. So obviously after that announcement came out on Wednesday, saw this huge move in the Australian dollar down more than a cent and a half in the space of half a day or so. So that's really currency coming under pressure, and I think that's only going to get worse. I think the economy is really sort of stagnating here, and I think we're going to see the Australian dollar a lot lower than into the 60s this year. Of course, that's what I've been saying for a long time in these videos. We gradually have had the gold price in Australian dollars really come up, and I think is almost at a all-time high close for the week. I've had some spikes up above 1850 in the start of January, and of course with Brexit, and then back in 2011 as well. But this week I think is an all-time high close above 1850 for the week. So that's obviously very positive, and there's nothing looking like it's going to stop this chart at the moment. All the sort of fundamentals with US dollar gold price are strong in the short term at least, and the Australian economy, the fundamentals of the Australian dollar look very weak at this moment. So I think I've called for $2,000 US gold, $2,000 Australian gold this year, and I think that's going to happen, and it may not take that long. If we see sort of a rapid deceleration in the currency and the gold price staying at these levels, seeing that nice decoupling that I'd talked about, and that's for the Australian currency often moves with the US dollar gold price. So if the gold price goes up in US dollars, Australian dollar goes up as well. But we're seeing that shift now where you're having stable gold prices in US dollars, but the Australian dollar starting to trade on its own fundamentals, and hence pulling down, and that's what I think gets this to 2,000. We've seen these moves. Only 3 months ago we were back at this sort of 1650 level. So we've seen a $200 move in the space of 6 weeks there or less, and I think we could see something similar that takes us to that $2,000 level. So we're breaking out, looking like it's going to break out into all-time highs. This is a really constructive looking chart here. I guess you could sort of call it a bit of a head and shoulders, inverse head and shoulders, with the head around this sort of 1350 level and the shoulders here around 1850. So we break out here, I think we can see a good move still, and I think that's going to be the story of this year still. And I'll do another video talking about some of the gold producers that are starting to do pretty well. The ASX 200 had a very good week this week. The Banking Royal Commission came out with its report, which was greeted positively by the market, mainly just because it didn't really challenge the status quo that much, aside from in a couple of industries. So that saw this big move in the Australian dollar, in the ASX 200 on Tuesday. I think now we're seeing this sort of kind of a blow off top of this move. We've been rallying for a month here. Fundamentally, I don't think the banks, I don't think the stocks of the banks were really affected by the Royal Commission. I think there's a broader economic woes here that will, are reasons for the bank share prices declining. So if I have them to recover, 4 to 6% on that on Tuesday is a bit overdone here. And I think some of the other bigger names in the stock market have had their sort of recoveries here, like BHP and Rio are sort of trading at levels where I don't think there's significant upside, especially with that iron ore price sort of, I think, at a pretty toppy level. So I think the ASX 200 here is a good shorting opportunity, and I think sort of stalling at a 200-day moving average there potentially, and also this level around 61.30 there, which had kind of been a bit of a breakdown level. So I'm expecting this not to move significantly higher, and the risks are to the downside here. That's my bias, especially with the sort of I guess the other thing is on Wednesday when the Reserve Bank governor made those comments and pushed the exchange rate lower, the stock market rallied on that news. Lower rates potentially, and that being good for the market. But lower rates are a sign of a weakening economy, and of course the stock market isn't thinking that far ahead. They're only thinking of the lower rates part, and now we can make more money from our exports, but they're not thinking of the weakening economy part, which is happening, but that it's just not here yet. So short term, it's sort of bad news is good news for the stock market, but I think bad news will be bad news at some point this year as well. So I'm looking out for that. So that's what I'm really sort of following. Same old sort of story. Those major indexes, but gold in particular, I think is looking very good here. And I think some of those Australian producers, I'll talk about them in a separate video, because I'm really liking some of the juniors now as well. I think this is a very good time to get set, and we're really at a sort of a moment here where we're getting a structural shift in some of these major markets, and that's I think going to be the story of this year.